Joining us now, Wedbush Securities Head of Technology Research, Dan Ives. Dan, it's great to have you here on set.
Great to be here.
There's never a dearth of information in the tech sector for us to talk about, but I do want to start with the Microsoft piece of this, because we always talk about whether the market feels like this is 1999, poised for a 2000, and here we are talking about Microsoft up for regulatory review. That sure feels like 99, 2000.
Look, if Khan was staying, that would be a different situation. I think the view of us and the view of many on the street is that Khan's days at the FTC are numbered. I think you ultimately get a more, we'll call it even-keeled, business-friendly sort of chair of the FTC in there. And we just think bark's worse than a bite when it comes to Microsoft. Microsoft went through that battle in the 90s versus, DOJ and U.S. government ultimately won it. And look, you're definitely seeing the strong get stronger in terms of big tech. And as much as this is really going to be a UFC battle that continues to really play out between big tech, but I just think when it's all said and done, the noise is going to be more than the reality, not just from Microsoft, but I think even when it comes to Google and others.
How much is going to hinge, though, on the Trump administration, the picks for DOJ, antitrust, and FTC? Because there are a number of names floated for each of those positions, and not all of them are, I would say, rah, let tech go wild. Some of them are much more focused on antitrust and I'll call it maybe potentially a similar approach to what we've seen in the last couple of years.
Yeah, I think on DOJ, you definitely get someone probably in between. I mean, look, Vance is obviously anti-tech, so you're going to definitely have someone that's a little on the aggressive side toward tech. But I think the big issue is on FTC. Because Khan, for big tech, it has been a nightmare in terms of Khan at the FTC. Her being gone, which we believe is ultimately will be the next step when it comes to January, that's bullish for tech. I think, look, a big reason when Trump came in, when you think about Khan out at the FTC, that's bullish for big tech. I think less regulations. And then who's at the table right next to Trump? It's Musk. And I think that's going to also play a big role unofficially in terms of some of these picks and where this all goes. But I continue to think in terms of this AI revolution, it is 10 p.m. at that party that goes to 4 a.m. And I don't see any of these appointments that's changing that party or that party closes early. I think we have a tech bull market that goes well into 2025, 2026. And I think a lot of this sort of noise that we see here are more opportunities to own these names rather than time to get nervous.
Do you buy Tesla here then, given the rally we've seen, the torrid rally we've seen this month?
I think get the popcorn out because I believe Tesla's a stock that could ultimately double from here over the next 18 months. It's been obviously a parabolic move, but as me and you have talked about, autonomous itself, we think is worth $1 trillion. So when you think today, I view Tesla as the most undervalued AI name in the market. It is not ridiculous. It might almost be conservative to think, could this be a $500, $600 stock? As the autonomous ultimately plays out, I think the margin story is definitely stabilized here. And I think investors, look, the haters continue to hate. They hate it at $50, they'll hate it here. But I think we sit here, and this will be sort of a golden star, in terms of when you look at the market in 2025, in terms of what we see for Tesla, I believe $2 trillion on the horizon.
In the enthralling world of the stock market, where numbers often speak louder than words, a recent analysis has become the talk of the town. Prominent investment analyst Gary Black of the Future Fund LLC has set the financial world abuzz with his stirring comparison of two industry titans, Tesla Inc. and NVIDIA Corp. These companies, while both leaders in their respective fields, have carved out distinct niches and amassed a legion of followers among investors, each offering a unique value proposition to the market. Tesla, renowned for its electric vehicles and pioneering strides in sustainable energy, continuously captures the imagination of those looking toward a green future. Meanwhile, NVIDIA stands as a cornerstone of technological advancement, with its cutting-edge graphics processing units driving innovation in artificial intelligence and gaming alike. Yet, Black's insights reveal a stark contrast in their earnings trajectories and valuation metrics, which might just send ripples through the investment community. As we navigate through this analysis, it becomes evident that understanding these nuances could redefine where smart money should be heading. Welcome back, everyone, to Investocracy.
Welcome back. Amid constant criticism and debate over his leadership, Elon Musk stands by the claim that he can turn Tesla into an AI leader. But new documents reveal he asked NVIDIA to prioritize chip shipments to X, not Tesla. Musk confirming CNBC's reports, explaining the chips would have been backlogged in the Tesla factory. CNBC.com's Laura Kolodny is here to discuss what she's learned. Lauren, thanks for joining us. So just take us back to the start here. What exactly happened? What did Musk do?
So in December 2023, Elon Musk ordered NVIDIA to ship 12,000 of these very coveted AI chips, H100 GPUs from NVIDIA, to X instead of to Tesla when they had been reserved for Tesla. And then in exchange, Tesla would get, the next shipments of chips in January and June. So he effectively delayed Tesla's being able to continue building out data center and AI infrastructure by 5-6 months.
So who paid for the chips, Tesla or X and XAI?
There's still a lot to be reported out here. Ostensibly, Tesla would have paid for Tesla's chips and X would have paid for X's chips, but maybe Elon Musk can answer that for us.
So we don't know whether Tesla paid for chips that ultimately went to another entity. We don't know that yet. But Musk just stepped in, big-footed the process and said, hey, Tesla's not ready to use these chips, not able to put them to work, but X and XAI are, so send the chips there instead. Is that the nub of it?
He's saying now that Tesla wasn't ready for them. This begs a question as to why X Corp had the resources to, get to work standing up a brand new data center, but Tesla, who's been talking about, developing robo-taxis, very sophisticated computer vision and AI, wouldn't prioritize that and wasn't ready. These delays weren't previously discussed in detail with shareholders.
In the financial arena, where predictions can be as volatile as the market itself, Gary Black stands out as a beacon of clarity and pragmatism. His recent comparison of Tesla Inc. and NVIDIA Corp. wields a scalpel to the myths and lays bare the numbers that matter most, their respective price-to-earnings growth, PEG, ratios. NVIDIA, which has become the apple of Wall Street's eye, trades at a PEG ratio of 1.6 times, a compelling figure for potential investors looking for growth at a reasonable price. Tesla's 3.2 times PEG ratio tells a different story, reflecting the premium that investors are expecting to pay for its anticipated future growth. This illustrates a fundamental aspect of investor sentiment, the willingness to pay a premium for future possibilities. Tesla's narrative, deeply intertwined with innovative visions of autonomous driving and sustainable energy, contributes significantly to its higher valuation perception. The numbers paint an unmistakable picture of the current market sentiment. According to Black, despite Tesla's impressive 32% long-term earnings growth projection, it's the valuation that investors must watch closely. Tesla's price-to-earnings ratio for the calendar year 2025 sits at a hefty 102 times, placing it higher up the valuation spectrum compared to NVIDIA's more modest 32 times. This positions NVIDIA as a more grounded investment, possibly suggesting a steadier climb in stock value as opposed to Tesla's more volatile peaks. But before we go any further, if you want to keep up with NVIDIA's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market. So click the follow button if you don't want to miss the newest market updates.
I was talking to a couple people in the industry whom I idolized last night, and GOAT kept coming up. GOAT kept coming up.
Referring to Jensen Huang.
Greatest of all time. And there are some people who are very cheery about knowing him because we know that he's ethereal. We know that he's not a bus. And we know that he carries himself like a gentleman. And it's ethereal.
Do you think he's a bigger visionary than Elon Musk?
Yes.
You didn't hesitate?
Yes. And I tell you why. Because I think in the end, I do believe that that's technology on wheels. And I think that Musk can see around the corner. But I think that Jensen is thinking about a legacy of changing the entire paradigm about the way the world is. Jensen is creating single-handedly an industrial revolution. And Musk is creating single-handedly a way to be able to deliver things. And those are both brilliant things, without a doubt. But to create an industrial revolution yourself, to create the loom, to create the train, to create the steamboat, who does these things?
Do Lisa Su and Gelsinger have any part of that? Or is this completely a solo job?
No, Lisa's watching right now and saying, Jim, why don't you give me my due? My current chips are equal to the H100, if not superior. Pat's as nice as ever.
Black's analysis doesn't stop at surface numbers. It digs into the heart of strategic investment reasoning. For those investors who prioritize buying low and selling high, NVIDIA seems to be the horse to bet on in this race of market titans. In a wide-ranging strategic context where valuation meets potential upside, NVIDIA offers a compelling intersection. The company is at the forefront of the AI revolution and cloud computing, sectors poised for exponential growth in the coming years. In a riveting turn of events that underscores Black's insightful analysis, we see data not only backing his comparisons, but elevating the narrative to a broader strategy for investors. For instance, the Future Fund Active ETF has delivered a striking 28.30% year-to-date return, handsomely outpacing other indices like the Spider S&P 500 ETF Trust, illustrating the fund's ability to capture market opportunities with precision, with Tesla showing a 34% gain and NVIDIA soaring by a formidable 180.96%. According to Benzinga Pro, the evidence speaks volumes about the dynamic play between growth and valuation. Investors tuned into Black's analysis can't ignore the robust strides NVIDIA is making. This significant leap accentuates NVIDIA's momentum within critical sectors driving our digital age, signaling the company's pivotal role in sustaining technological growth. Even if Tesla's engine is roaring at a different pace, the savvy investor knows where to look for mileage on a journey toward maximizing returns. Thus, the stage is set for discerning investors to weigh the balance between futuristic ambition and achievable prospects, guiding their strategies towards markets that resonate with their risk appetite. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
I mean, I think Musk goes to a different set of rules, and I think as it all plays out, as we're seeing, this is it could have some bumps in the road, but I don't see how this is all going to change. In other words, I think autonomous is going to get significantly fast-tracked. The AI piece is going to get fast-tracked. And that's bullet. Look, the poster child who's going to benefit here is going to be Musk and Tesla.
What about the angle from Tesla with the credits? One thing I've heard is that if they remove credits, then the lesser peers struggle more. And that one seems like there's a few leaps of logic there.
Well, removing the credits is negative for the EV industry, negative for Detroit, right. 313 area code, bullish for Tesla because they have the scale and scope that's unmatched. They make profits on a $35,000 car, $10,000. You look at the tax credits are essentially given an even playing field to give affordable cars to some of these new entrants. That's out.
Yeah,
that's bullish for Tesla.
Okay, so you're saying basically like a Rivian, I don't know the names, or I mean like some of the companies that are losing a ton on their vehicles basically will have to like cease operations.
But also Rivian's a high-end consumer. They're not focused on tax credits. Like you're talking about vehicles in the $35,000, $40,000 range. Mm-hmm. Look at GM Ford. GM has 10, 12 vehicles come out. You take the credit out, it's a game changer. And guess what? Musk is almost like wasn't invited to the party for 8 years. That being the White House party. It's all about Detroit, Barra, GM,
totally.
Biden, UAW. Now all of a sudden they come to his house and he's sitting there in Mar-a-Lago. That's not a good situation for GM.
As the curtain falls on this gripping market tale, one thing is clear. The balance of power in stock narratives is continuously shifting, inviting both caution and curiosity among investors. Gary Black's insightful analysis urges investors to pay heed to valuation metrics that truly matter, making a persuasive case for NVIDIA as an enticing investment opportunity within today's volatile and ever-changing markets. With its favorable PEG ratio and resounding market performance, NVIDIA shines brightly on the investment horizon, a beacon for those seeking stability coupled with growth. Conversely, Tesla's fireworks and long-term growth continue to draw their gaze, demanding attention from investors who are willing to embrace risk for potential rewards. For potential investors pondering the trajectory of NVIDIA's stock, the predictions remain decidedly optimistic. Analysts foresee continued vigor in its market course, underscored by sustainable and robust earnings growth rates that hint at promising prospects. This forward-looking optimism posits NVIDIA not merely as a current performer, but as a continual innovator set to influence future technological dominances. Meanwhile, Tesla's commitment to trailblazing energy solutions remains a fascination for those willing to stake premium on avant-garde technology. And finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen.